Hey guys, what's going on? Coming at you with a Thursday night video. I just wanted to make another follow-up video basically on this year, where it's going. It's been an insane January. I just wanted to talk about some key points that happened in the past day or two since I last uploaded. Uh, if you haven't watched my previous videos, I'm a long-term investor. I actually haven't bought a stock yet in 2023. I went super heavy in Q3 of 2022, and I went super heavy all into Q4 of 2022 also. So ran myself single-digit cashed up a lot. I actually sold 3 positions. I'm gonna make a video this weekend on that. If you're just curious what I sold CCL for 35% profit. I sold Foot Locker for 22% profit. And I also sold, what else did I sell? I sold one more, I'm drawing a blank. Foot Locker, CCL. Anyways, I did sell something else. It's just not going across my mind right now. But yeah, I'm up about 35% as a whole this year in realized gains. So pretty happy with that. I'm just sitting that cash on the sideline right now, and then I'm going to wait for a pullback or some scary news that VIX will go above 30 again or something like that, just to deploy it all in my favorite stock. So that's kind of my plan right now. So I'm just kind of sitting tight, enjoying this rally. I think the bears are getting a little scared, in my opinion. So I'm an optimist. So, you know, that's kind of my investor theory. I like basically buying when there's a lot of fear, and when there's not fear. Like right now, there's a lot of panic, I think, going into the market, and it's just rallying up. So that's what we're seeing. So I'm not interested in trading or getting into this rally. I will patiently wait, and then wait for good opportunities, wait for the market to pull back, settle back down, and then I'll, you know, keep averaging into my position. So that's kind of my goal right now. So I don't know when that's going to be, but some things I do want to talk about. A lot of money basically is on the sidelines. So if we look at Wall Street, or we look at you know, people that just portfolio manage, stuff like that, they did not buy. You know, the volume in Q4 was very low. People thought January was going to be very bad going into the new year, saying, oh, it's going to continue to go down, it's going to continue crashing. So there's a ton of money on the sidelines waiting to go in. I think we're seeing companies start covering shorts and then slowly sprinkling their money in now. That's why we're seeing this rally this month. So it did the exact opposite of what Wall Street and CNBC said. Go figure. So there is a lot of money there. So that should give you hope for a good year this year, and we're off to a really good start. Tesla, they reported yesterday after the bell. Nothing spectacular, honestly. I listened to the conference call twice. Elon is, in my opinion, he's the smartest and best businessman in the world, which is why it's my biggest position. You know, the stock has had a tremendous run the past couple of weeks. It's up like 40 or 35% from the intraday lows at like 101 or 102. My cost base is $49 a share, so very happy it's going back up. Really didn't panic, didn't really sell anything. I've been a holder since early 2019, so don't plan on selling that anytime soon. I think it's going to be a multi-trillion-dollar company one day, and Elon seems like he has a vision, and he's probably going to execute it. He's got the best team in the world, in my opinion, in that field. So I feel like even buying right now 155 or 160, whatever it's at right now, it's still under a $500 billion market cap, and that's silly. Last year, during the crazy hype, it was over $1 trillion. Even then, you could argue, if you're really looking long-term, $1 trillion market cap for that company, in my opinion, isn't really outrageous. So anyways, did great. They had a 10% basically move today, going up. So I think the Twitter debacle and all the fear in that, and him taking cash out of the company and seeing how bad you know, sales were in Q4. You got to remember, they did do that cut in Q1 this year, and in his conference call, he did say that the inflows were better than any point in time in history. So that means there's still a lot of demand for the product. They just wanted consumers just want a discount, so that's great. It means people are still willing to spend, and people still have money. So depends on how you look. As long as inflation keeps going down, we're fine. Like, that's good. So that means we're just not probably going to have that deep recession that some people were talking about. Personally, I don't even think we're going to have a recession at this point. The consumer's so strong and relentless. And then, you know, I'll get international stuff later in this video. But another thing that came out, Shopify's had a real nice move this year. It's been up, I think it's up like 30-40% in the past couple weeks. They did have a preliminary report before, you know, they come out with earnings. It did move 10% off that. Super awesome, gives you a lot of hope. I personally am in the wholesale business, and a lot of customers of mine use Shopify as a platform, and they love it. It's a really sticky business model. It's a great company. It's well ran. Once they start turning profitability, that thing, Wall Street's really going to look at it and think it's the real deal. And once they realize we're not going into a deep recession, the consumer is still strong, I think that's going to be a very good play in the next coming years. That's kind of like my riskiest play I've been buying recently because they are not profitable yet. But they are going to probably be profitable this year, if I had to guess. So, tail end. They did add, obviously, it's a subscription. So, they did add a higher fee for all their subscription models, which is great. It's going to add to profitability. Again, it's a sticky business model. So, I feel like people that get used to it or use it currently, they're just going to eat that cost, pass it off to the consumer, and then go from there. So, that's good for that company because they're growing users like crazy. I think the Bears right now, I think they are really just giving only bad news in the media. I think they're panicking a little bit. I didn't think they'd think that we'd have this strong of a rally, especially in January. Everyone was so bearish going into the new year, being like, oh, we're going to have a rough couple weeks. We need to see the February 1st CPI report. We got to see what the Fed's going to do, or we got to see what the Fed's got to say February 1st. We got to see what the CPI is in January, and they got it down a couple times before that. So we have to remember all that. Like, people were very bearish. I think people are kind of caught with their pants down right now, and they're trying to spew bad news out there to scare people so they can get in at the bottom, make all the money. Then when they position in, then they talk good about the market to kind of make the most amount of money. That's how it goes every single time. That's how the portfolio managers make this money, get these bonuses, and they try shaking out retail every time. Retail usually buys at the top and sells at the very bottom, which is exactly the polar opposite of what you want to do. So global inflation, it is actually not that bad. It's not as bad as expected. We thought going into the new year that inflation globally would be the problem and they go into a deep recession. If anything, worse, the U.S. is seeing the slowest GDP growth. So you have to remember, think big here. Well, we need everyone to be good, and we were least concerned about ourselves. Well, I think we're going to have the actual biggest problem with GDP this year. So in a weird way, that's good because we were not concerned about ourselves, where we're the biggest problem. So we didn't think we were the problem or the biggest problem, but we are. So that's kind of good because we can kind of control that a little more. And we usually adapt a lot quicker and more efficiently than other countries. So that's actually good. And that's what you see, like the Euro and Germany, all these guys, their indices rallying. Asia, the reopening, they're all rallying very strong, where the S&P is hardly moved this year. It's only 4%. So that's good news. Some things that, you hear the bears talking about, second round of inflation. This, to me, it's kind of one of those things where I don't think we're going to have it, and that's too long-term out to even price that in or think about it. I think, again, that's just bears trying to freak people out and scare them. So I'm not too concerned about that, to be honest. We'll worry about that when the time comes, or we start seeing indicators, but inflation for the past multiple months has been just going down, 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 down. And then even before they report the CPI, they've been revising down. So they're even, the analysts are even getting it off. It's going down that quick. So every indicator shows we're not seeing that anytime soon. So there's no point even worrying about that, in my opinion, right now. Reductions. So the Fed said they're going to hold and pause at around 5.25, maybe go up to 6. First off, I don't think they're going to make it to 5. I said that in my last video. I do think they're not going to hold all year. I think they're going to start reducing rates because inflation is going to come down a lot quicker than what they think. And that's not going to put us in a recession, in my opinion. And we're going to start seeing deflation because the comps last year, especially like housing and rent, are going to be negative. They're going to read negative in probably, sometime in the late spring, early summer. And the Fed's going to panic at that point. And then they're going to start reducing rates, in my opinion, in July and August, which is going to lower interest rates, which is going to stir up spending. And then hopefully we kind of get into that soft-ish landing. If we get in a little bumpy or rocky, they'll let it sit a couple months, in my opinion. And I wouldn't count it past the Fed to print some money if needed for the holidays to stir up some business, or if things aren't getting off the ground again. So that's kind of my thought. My portfolio this year, my actual portfolio without putting nothing in, I did no buying, nothing. It's up 22% this year. So that's insane. My goal every year is 15-20%. I'm already up 22% this year. The S&P is up a little over 4.5% this year. So I'm completely destroying the S&P. My portfolio, because of Tesla, obviously it ran 2.13% today, but my whole portfolio as a whole is up 22%. So it's crazy to think it moved that quick. We were supposed to have a bad January, and I'm up 22% in January. So not saying obviously we can average the whole year, but if I finish the year at 22%, I'd be happy. So it's cool. Let's just keep working on cash, buying good companies, and go from there. So that's really all I got. If you guys like this video, make sure you guys subscribe and like it. Let me know below if you guys are buying, if you're selling, what you think the market's going to do. I'll let you know when I buy stocks or sell stocks or something like that, but I've done nothing in the year of 2022 yet as far as buying. So that's all I got. Till tomorrow. Peace.